Hey guys, David here. So in this video, we're going to be looking at the Bitcoin chart and looking at one of the biggest moves Bitcoin has had in recent history, one of the most profitable moves. And we're going to be working out how we could have played part of that, been part of that move, 130% move to the upside. What signals, what indicators would have meant that we would have been on the right side of that trade? That's what we're going to be looking into in this video. So I plan to be covering these particular indicators, the RSI, MACD, the Fibonacci, the Bollinger, looking at trend lines, support, EMAs, the 4-hourly chart, the weekly chart, the S&P 500 correlations with the US dollar correlations, chart patterns and general consolidation of the chart. So we're looking for indicators, looking for reasons where we could have gone long. And to be clear, I'm talking about this consolidation area here. Previously, the price had broken down and was headed back up. Now, the narrative at the time was this had been a massive Wyckoff pattern and that Bitcoin was going to go to 100K. So everybody believed that it was going to go up, right? So May 2021, COVID was in full swing. So what did we have right here? Well, price had gone through its Wyckoff distribution channel and come down. This is the daily chart in case that was not obvious. We had multiple retests of the same 30K level. Right, what do we see here? Well, we see a lovely support and resistance. That price bounced off multiple times. Sure, this is not the strongest resistance in history, but it is the most recent, which is worth noting because Bitcoin behaves that way where other charts don't seem to. This is the 50 period moving average and Bitcoin did not pay any attention to it at all. If we swap it to the 20, Bitcoin doesn't do anything with it in particular. It bounces off it a few times, but obviously breaks. The 200-day moving average doesn't do anything either, so I'm ignoring those moving averages. Go across to here. I found the moving averages in this scenario to be useless. However, support was very useful. It provided very good, lots of bounces and tests of support. In this same period, if we pull up the RSI, I was watching the entire time. There is a very strong down trend line of the RSI. And as we can see, every time the RSI came up to test this trend line, it was strongly rejected. And then it eventually broke out. This was the breakout. Something I've noticed recently about the RSI is that when the RSI comes up to test a trend line, it often gets rejected. Notice how we got rejected here when the RSI came up to check the test of trend line. Came up to check the test of trend line. Was approaching but didn't reach it but got rejected. Came up to test the trend line but did not break. And yeah, so the RSI trend line was very, very strong entry, which is actually one that I used when this particular scenario was happening. Back in the day. Same on the MACD. We have a lovely MACD trend line. Entry on that, however, would have been really early. So you have to be careful with the MACD one. But to draw the RSI trend line again, entry on this would have been the breakout of this zone, which would have been the third test. And the second candle on the reversal would have been your entry, which is an insane entry. So the RSI trend line is a definite green. The MACD trend line was a bit of an orange. However, I do want to point out we do have a little bit of, come on. We do have a bit of divergence on the RSI and we do have divergence on the MACD, right? So what else do we have to cover? We have the Fibonacci. Let's have a look at the Fibonacci before. If we go from the COVID lows to the top, it's roughly a 0.5 retracement level. It's a good zone for a Fibonacci retracement, but I don't like the Fibonacci. If you do like it, then it is there, but technically we have good correlation in this particular scenario, so I'm going to have to give it a swanky green. What about trend lines? I was looking at trend lines before, and honestly, like the entry, you did have one, but it's really late, all the way up there. The RSI trend line was way earlier. If it's trying to draw lower grade trend lines and just pick up tops and bottoms, I find them difficult to use. One that I have been told about in the past and like to use is channel trend lines, and that actually does work. If we keep moving these down, we are picking up peaks and troughs, but I find it's kind of a delicate taste. So trend lines I'm going to put in the orange. They are there, but you know, I don't particularly like them. So what else? I wanted to look at the Bollinger Bands on this. As we can see, Bollinger Bands are coming up. However, if we move this to the 200 period Bollinger Band, which didn't happen, we can see price had strongly broken out long and then was coming back to consolidate down, revert to the mean, which is worth noting. So I think that's kind of important to see there, that it's worth noting that the Bollinger Bands on the 200 period had reverted back to the mean. If we swap across to the weekly, I'm curious to see what the Bollinger Bands look like. The Bollinger Bands on the weekly, they were busting out very high. This is on the 20 of the Bollinger Bands, and then reverted back to the mean. So yes, Bollinger Bands gave you a good indication of going long, that it was reverting to the mean, but it was, yeah. All right, let's get rid of the Bollinger Bands. So continuing on the weekly chart. This is our entry from the previous, from the RSI and the daily. We do have a similar entry on the weekly, but it is quite late in comparison. All the way up there, and then you have to face a lot of drawdown, so it's not as nice. However, I do want to point out that on the weekly chart, we have it price coming down to tag the 50-week EMA multiple tests before going long. So it's strong confluence with the weekly EMA there. So I'm going to give the weekly a green because you do see bouncing off the weekly EMA there. What I do love though is the 4-hourly chart. As soon as we get across the right price action, look how price behaves around the 200 EMA. This blue line is the 200 EMA, and it came down, it broke below, came down, fake out, test, test, almost a test, then strong breakout to the upside. So both the 4-hour and the weekly have the confirmation, but I gotta say, actually, I'm gonna reduce it to a faint green because it is a bit arbitrary. So far, the best signals I'm finding are the RSI and the support. What I also want to add though to this chart is what happens if we add the S&P 500 over the chart. We follow the S&P 500 from roughly the COVID lows. We can see Bitcoin overtakes it, comes up much higher return, and then reverts back below it before coming back to equalize. What I want to point out is that Bitcoin had been going down in this period, but the S&P 500 had been going up, which is strong divergence. So there was quite the possibility that Bitcoin was going to revert to the mean. Like later on in the later price action, I am noticing that the S&P 500 was going down and Bitcoin was going down. So there is some correlation. The S&P 500 could have provided a clue in this regard to actually go long. Now, a lot of people have been talking about putting the Dixie over the top of it and seeing how the Dixie behaves regarding price. I admit I'm struggling. As the Dixie goes up in value, Bitcoin goes up in value. As the Dixie goes down, Bitcoin goes down in value. Then as the Dixie goes up in value, Bitcoin goes up, and then the correlation breaks and it goes the other way with Bitcoin going down and the Dixie going up. So I don't understand how I can use the Dixie to predict Bitcoin price. That's what I'm saying. I don't like the Dixie here, but the S&P 500 is perfect, I must say. I love it. So the S&P 500 was great. I'm going to delete the Dixie from this and give the S&P 500 a solid green. Chart patterns. It's not really a chart pattern that I'm aware of unless you go off the descending triangle and then it broke to the upside. So you could play the chart pattern. Either way, consolidation, I really like this one though. We can see that Bitcoin price is coming down and consolidating at a single point right here on this support and resistance. It was quite obvious that something was going to happen at this point. Bitcoin was either going to break down or Bitcoin was going to break up. And it was a case of look at the chart and see which way it was going to go and enter the trade. The most obvious trade at this time was to pretty much put a buy order above the most recent candles as price went down and then enter as price broke out. You wanted confirmation? Then adding the RSI trend line in gave perfect confirmation on the second candle. So I like the price was consolidating, so it had to go somewhere up or down. It was probably going to go strongly. So take your pick. So from what I've determined, from my analysis of this particular scenario, we had multiple confirmation factors that price was going to go up or down, and it was leaning towards up given the way the RSI support and the S&P 500 were positioned. So there was no reason that we couldn't actually get into this trade when it was happening live. And when I did actually have a trade there. I got screwed over by my CFD broker in that regard actually, but I did in fact enter long there, which was proved out to be a wise decision. Though in hindsight, I was believing the Bitcoin narrative that it was going to go to 100K and that there was no space for a bear market. So I was kind of snookering myself and believing where the market was going to go and not looking at price action very well. So in future, I need to look at the indicators and play where the market's going, look at the charts and decide if where the chart is going rather than where I believe the chart is going. And that's really important.